All right. Lindsay, you want to come on up and we'll open the public hearing. So we're going to open a public hearing in ways and means we'll do revenue projections. I'll ask Senator Benton to lead us in the Pledge of Allegiance.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Good morning, everybody. We're going to get and start our revenue projections with the Department of Revenue Administration. Members of the committee understand that at some point today, we're going to exec the last three bills we have to get them off our plate and to get them on the Senate floor so that we can focus more on the budget stuff that's going on. And with that, Commissioner, it's all yours.
Good morning. For the record, Lindsay Stepp, Commissioner at the Department of Revenue Administration, and we are here to talk revenue estimates. You should have in front of you a packet, blue and white, that looks like this. I think I'm scheduled for an hour. I'm going to try to move through this pretty quickly so we have some time at the end to address questions, but I'm also happy to stop at any point and answer any questions that the committee has. So the way that DRA has historically and continues to approach revenue estimates is we are in fiscal year 25. That fiscal year will end on June 30th. What we do is we first estimate where we believe the fiscal year will end for each of the taxes that DRA collects, and then we apply a growth rate to fiscal years 26 and then fiscal year 27. Chris Shea and the LBA will help you with the spreadsheets to make all of that math happen. And so what we're going to first do is talk about first the taxes that the DRA collects that we're going to address today include the business profits tax, the business enterprise tax, meals and rentals tax, tobacco tax, interest and dividends tax, with a slight caveat that that is going away. And so our conversation there, I think, can be pretty brief. Communication services tax, real estate transfer tax, and utility property tax. When we are looking to estimate fiscal year 25 as the base for fiscal years 26 and 27, we run a number of scenarios. And those scenarios include what is planned for that tax. Sustaining percent versus plan takes the actual revenue for the first 10 months. So what we've collected through April, we are on the last day of the month. So there might be a little bit more revenue that comes in today, but for the most part, April is finished. So we'll take actual revenue for the first 10 months and then look at how revenues have been performing this year compared to plan. And we'll apply that percentage to the remaining 2 months of plan for 25. We do that same analysis with how revenues are performing compared to fiscal year 24. And then what we'll do is we'll take actual revenue for the first 10 months, look at what plan is for the remaining 2 months, and then actual revenue for the first 10 months with what prior year looks like. The Senate is typically at an advantage. You have 10 months of revenue, so you're really only looking to estimate those remaining 2 months. So that the amount that you're estimating is smaller. So you're in a good spot here. You'll see that the ranges that we have for fiscal year 25 are pretty narrow because most of the revenue has come in at this point. When we look at these various scenarios, what we're going to present to you is a low and a high for fiscal year 25, and that's based on those scenarios that we believe to be reasonable. For instance, if a tax is performing sufficiently over plan, we're not going to present plan as an option to you because that's just not realistic. Moving to page 2, we're going to dive right in to business taxes first. We're going to talk about business taxes as a whole. Those taxes in fiscal year 23 were split 78.3% to the BPT and 21.7% to the business enterprise tax. Again, we'll work with the LBA to split the total amounts out between BET and BPT once the total estimate is determined. Factors to consider when estimating the business taxes. Fiscal year to date, we are $156.2 million, or just about 15% below plan. And we are $134.4 million, or about 13% below prior year. While the economy is performing relatively strong, we are seeing many businesses kind of reset their estimate payments. Estimates are the primary source of revenue for the business taxes. So the majority of business tax revenue comes in the form of estimates. And we're seeing businesses essentially lower those estimated payments that they're sending to the state. Other things that we're watching are supply chain constraints, disruptions in ports and factories, obviously tariffs or other sanctions that may impact business profits. Currently, we have a relatively low unemployment rate. That is good for the economy. If that were to change, that would impact our estimates and also any interest rate changes. So looking at the range for fiscal year 25, we have a low of $1,063.7 million and a high of $1,102.8 million. That low takes the first 10 months of revenue for the year and basically says if we continue to perform the same way that we have compared to prior year, we'll end up at that $1,063.7 million. The high assumes our actual revenue through April, and then that we make plan for May and June. May is a relatively low revenue month for business taxes. So what that estimate essentially does is say that June estimated payments will rebound to the level that's contained in the plan. Then we look at growth rates for fiscal year 26 and fiscal year 27. In each case, we have a range that's relatively wide, maybe a little wider than I would like to present, and that's 2% growth to 8% growth in each year. The reason why that's such a wide range is that there is quite a bit of economic uncertainty at this point, and I think businesses are feeling that uncertainty, and certainly we have seen that uncertainty reflected in some lower April estimated payments than we were originally anticipating. So if things in the economy kind of settle down a bit, if the stock market settles down a bit, and businesses are feeling more confident, I think we will see additional growth. If the economic uncertainty kind of continues, I think our growth will be tempered. And so that's why we have that low end of the range at 2%. I am still forecasting growth from 25 to 26, as I do believe that we are at a bit of an inflection point. We've come down from those high revenues for business taxes that we saw in the fiscal years following COVID. Some of that was due to the cap on credit carry forwards. And like I said, the resetting of estimated payments by businesses. So I think we're at an inflection point. But how the economy behaves as a whole and the confidence and certainty in the economy will determine how much growth we see in 26 and 27. I'll stop there for questions.
Do you want to go one way to the end? Then we'll go back and we'll take questions again through the presentation. Let's get through the entire presentation because I think we'll get maybe some answers in other areas that might make sense. So.
Happy to wait. Okay. Page 3 is the meals and rentals tax. And that tax is 80% from meals, 18% from rooms, and 2% from motor vehicles. So the majority of the revenue that we're talking about here is with meals. I know you have the Restaurant and Lodging Association coming in later on this morning, and I think they'll be very helpful giving you more insight into how this tax may behave. Meals and rentals is performing relatively well. Fiscal year to date, we're just about 10 million or 3.6% ahead of plan. And compared to prior year, we're 7.6 million or 2.7% ahead. A couple of things that we're watching, the inflationary impact on the cost of meals, and I think we've talked about this before, where inflation will likely cause and has caused the price of meals to increase. That will essentially increase the amount of revenue that we receive because the price of the meal is the base of the tax, up until a point where the prices get so high that people start to back off. So we have seen the price of meals increase, and we haven't yet really seen consumers kind of constraining in that way. So the tax has been growing. One recent thing that has us slightly concerned is the impact of international visitor travel to New Hampshire. Travel really did increase after COVID. Everyone learned how much they like to travel when they couldn't do it. And so we saw significant travel to New Hampshire. We might be seeing a bit of a cooling effect, especially from our Canadian visitors. I know the Division of Travel and Tourism is watching that. If that happens, we may see some slowing in the growth of M&R. Also, if there is an impact at all with U.S. domestic travel, increased U.S. domestic travel because of not traveling overseas, i.e. more staycations, that could be a positive for us relative to M&R. So just something that we're watching in terms of whether international travel is going to impact the meals and rentals tax revenue. Also, just two quick things to note. From the meals and rentals tax revenue, we have two transfers that come out of that. One is to the municipal revenue fund, and one is for school building aid debt service. You'll see those transfers come out in our calculations, and the LBA also has the math to do that as well. And so they will work through those numbers once decisions are made.
Lindsay, if you don't mind one second. Chris, I just want to make sure we're reporting on the net after the distribution rate.
Correct.
Good.
So for fiscal year 25, where are we going to end the last 2 months? We have a relatively small range of 333.8 million to 336.7 million. The low assumes that the growth that we've seen over prior year will slow for the last 2 months, and that the last 2 months of M&R for fiscal year 25 will be equal to that of 24. And for a high, we assume that our sustaining percent versus plan, that essentially that 3.6% that we've seen year to date, that will continue for the last 2 months. Looking at 26 and 27, for fiscal year 26, our low end is a flat amount at 0% and a high amount at 5%. And then for 27, we have a 2% to 5% growth. Again, that flat amount in 26 is that we anticipate that we do see that cooling effect and that we do see an impact from a reduced number of Canadian tourism or is in the summer, and then international tourism during the foliage season. 5% is generally a pretty standard good year of M&R growth based on what we've seen historically, so that serves as our high estimate. On page 4, we have the tobacco tax. And the tobacco tax is a combination of a tax on stamps that go on packs of cigarettes, literally stamped on the bottom of a pack of cigarettes. That makes up 83% of the tax. And then 17% of the tax is other tobacco products. And that's a combination of e-cigarettes and then what we call OTP, loose tobacco, chewing tobacco, pipe tobacco, those sorts of products. Fiscal year to date, we are 24 million or 13.6% below plan, and we are 7 million or 4.4% below prior year. We are seeing a decrease in stamp sales. Fewer people are smoking cigarettes, but we are seeing some growth in other tobacco products such as e-cigarettes, chewing tobacco, etc. Other things that we consider is the availability of products in surrounding states and cross-border elasticity. So some of our surrounding states have banned certain products, certain tobacco products, such as flavored tobacco products. And so that can have an impact on our sales here in New Hampshire. And then also in terms of cross-border elasticity, our tobacco tax rate here in New Hampshire is lower than the surrounding states. And so we will see people from out of state come and purchase products here in New Hampshire. And so those are things that we consider when we are estimating revenues. For fiscal year 25, again, we have a really small range here, about 183.3 million to 183.9 million. And then for fiscal 26 and 27, fiscal 26, we have a -5% to -3% range, and then a -3% to flat range for 27. That assumes that this decline in cigarette sales continues, but that there is some buoying effect, if you will, by the increase in other tobacco products. Historically, before the pandemic, a year-over-year reduction of 3% was typically what we saw with the tobacco tax. We saw an increase in the tax during COVID for a variety of reasons. One, the pandemic was quite anxiety-producing, obviously, for many people, and many of those people coped by smoking more cigarettes. They were at home, and cigarette sales went up. Also, around that same time period, we did see Massachusetts ban flavored and menthol products, and that resulted in an increase here in New Hampshire. Those increases have kind of tapered off, and we're going back to the continued year-over-year decline that we've seen previously. Page 5 is the interest and dividends tax. There's a lot of words on this page, but I'm just going to summarize it really quickly. The tax has been repealed, so you don't need to worry too much about the remaining amounts to come in 25 because there's really no growth for 26 and 27. We are estimating about 8.7 million in revenue in 26, and that's just as the tax wraps up. Taxpayers typically don't always file exactly on time, and so there will be some residual revenue that comes in from the tax in fiscal year 26, but by fiscal year 27, our expectation is that that tax is fully wrapped up with no revenue. Page 6 is the communication services tax. So this is the tax on two-way communications. Historically, it was a tax on landlines. We've seen a move away from landlines in recent years to the use of cellular phones. Fiscal year to date, we are 1.1 million below plan, and we are 1.6 million or 6.2% below prior year. This tax is pretty consistent year to year. Things that we consider that impact the tax is an increased use in video conferencing that is two-way communications, and so that can increase the tax. But again, on the other side, the decreased use of voice over internet protocol or VoIP phones and traditional telephones have a negative impact on the tax. And probably the biggest impact that we've seen in recent years is a shift in the allocation of billing for wireless plans from voice to data. So on your cell phone bill, the portion of your bill that's subject to the communication services tax is only the portion that is allotted to two-way communication, so voice and texting. The data portion of your bill, which you use to access the internet, that's not taxable under communication services tax. We cannot tax internet access. So as people are using their mobile devices more and more to access the internet and less in the way of two-way communication, that's causing a bit of a decline in the tax. So we're assuming that the tax ends the year somewhere between 28.7 million to the plan of 30 million, and that we see somewhere from a -3% to flat growth in both 26 and 27. And again, that's just the general trend that we've seen in recent years for the communication services tax. Page 7, the real estate transfer tax. So fiscal year to date, we are 4.1 million or 2.4% below plan, and we're 16.8 million or 11% ahead of prior year. The real estate transfer tax is a bit of a bright light in our revenue estimates at this point. It has been performing better than prior year and almost to plan in the first 10 months. The amounts that year to date are net of a $5 million transfer to the Affordable Housing Fund that happens in either September or October. Things that we're watching, impact on mortgage rates. Obviously, if those rates, they have increased and they seem to be somewhat steady at this point, but if they start to come down, I think that will generate some activity in the real estate market. Obviously, we're also watching median home prices. Those are high, and so there are two kind of factors to the real estate transfer tax. You need the transactions to occur, and then the tax is on the amount of the transfer. So we can have a lower volume of transactions at a higher price, and the tax is kind of sustained. In the reverse, if prices start to fall, but that causes transactions to increase, that can also cause some growth in the tax. So we kind of have to watch both sides of the equation there. As we all know, there is an inventory shortage. There are homes that are selling before they're even making it on the market. So that is something that we're watching. Cost of building supplies for new construction is also a point to pay attention to. And then right now with those median home prices, it's just the affordability factor is very low. It is very hard for for many folks to purchase a home, even if they wanted to at this point. So where do we think we're going to end fiscal year 25? Somewhere between 201.2 million and 205.9. The low of 201.2 assumes the first 10 months of revenue, and that our last 2 months of the year look like prior year. We have been performing above prior year, but there was a bit of a slowdown in March. And so that assumes that we will see a little bit of a tempering of the market. The high assumes the actual revenue for the first 10 months and that we make it to plan for the last 2 months of the year. When we're looking at growth ranges, that's 3 to 8% in each year for fiscal years 26 and fiscal years 27. That assumes that the market continues on the path that it's on. I mean, we're currently 11% ahead of prior year. I don't think that's sustainable for a long time. So we kind of lowered that growth to 8%. But a 3 to 8% growth assumes that the pent-up demand of the market remains and that there's more supply and that demand is met with that additional supply. Page 8, the last tax to talk about, and then we'll do some summaries, is the utility property tax. So this is 4.6 million or 14% ahead of plan, or 1 million or 2.7% below prior year. This tax functions pretty consistently year to year. We have a small range for fiscal year 25 at 47.6 to 49 million. And then our range for 26 and 27 is 0 to 3% growth in each year. That is what we've seen consistently with this tax over the past few years. This is a tax only on utilities as defined in the statute. We can see some fluctuations based on the values of those utilities. That value is set by the DRA. And certainly if new property comes online, that would increase the tax. If property comes offline, that would decrease it. But for the most part, it's a pretty consistent tax, just under $50 million. What you have on page 9 is just a summary all in one place of all the taxes of everything that I just went through. So it's kind of an easy place to see everything together. And then on page 10, you have for all of the taxes and then a total for the taxes that DRA estimates. You have where fiscal year 24 audited revenue ended up, what fiscal year 25 plan looks like. And then we have in gray, the governor's estimates, in blue, the House estimates, and then peach and green, I guess. Those are the DRA lows and highs that I just presented. And again, based on data through April for 25, and then the growth rates for 26 and 27. So again, kind of a one-stop, easy place to see everything together. Happy to answer questions.
All right, so let's go back. We'll start back to the beginning. We'll take questions by order of the tax that we went through. And if you have any questions on that tax, we'll go through. So we'll start with the business profits tax and the business enterprise tax. So Lindsay, I do have one question on your presentation, is that when you talk about on this bill, you have the 2% low and 8% high. That's over the 25 number when we're talking about 26, but then you have for 27, we're talking 2 and 8, that's over the estimate of 26. Is that correct?
That's correct. Yep. So in each year, it's over the prior year.
Just want to make sure everybody was on that page. Senator Rosenwald.
Thank you. Commissioner, do you think that the effect of the change in the credit carry forward has fully played out?
For the most part, it has. What Senator Rosenwald is referring to is there was a change. Our legislation was put in place so that businesses can no longer carry forward on account more than 500% of their liability in any given year. So if I filed my tax return with the department on April 15th and my tax liability was $100, but I had made, say, $1,000 in estimated payments, I have an overpayment of $900. I paid the state $900 too much. Years ago, or before the change, the business could carry that full $900 forward on account. They would say, yep, state, you keep it, I'll use it up over time. Now, what happens is they can now only carry forward 500% of their liability. So in this example, they can only carry forward $500. And that additional overpayment of $400 has to be refunded to them. We had a number of businesses over the years that had pretty significant credit carry forwards. And so when this law went into effect, we saw a fair number of refunds. Most of those refunds have worked themselves out. That happened for the most part during fiscal year 24. In fiscal year 25, we are seeing refunds, but they're not at the same magnitude as they were in 24. So businesses have kind of right-sized their estimates and have right-sized their credit carry forwards consistent with the law. There was also a provision for that 500% to be reduced to 250% and then to 100%. And during the last legislative session, those reductions have been kicked out to, I believe, fiscal years 29 and 31. So they're kicked out into the future. So we don't need to think about those just yet.
Yeah. Anybody else on the business profits tax? So Lindsay, I do want to ask a question. So the Fed, money policy is what drives businesses, right? So what interest rates look like, they borrow enough money in order to capitalize a project or anything else. So the Fed is looking at a reduction by the end of the year of 2 to 2.5 points on the current rate. Will that spur economic growth? Do we think is that policy going to allow businesses to be able to borrow money at a more reasonable rate in order to do projects, whether we're talking about housing or we're talking about just a revamp, they're going to do an energy efficiency program. And so therefore they think the combination of the lower interest rate and the savings in electrical rates for their project will spur them to do those projects rather than hold back, which I think is what's happening now.
Right. I do think what we are seeing is a shift from businesses over the past few fiscal years of the economy was good. There was a lot of money in the economy through pandemic relief, et cetera. The economy was chugging along very well. And what we were seeing from businesses is, I don't want to be caught short on my tax bill. Here, states and federal government, let me make sure I have enough on account to cover my bills. What I think we are seeing now is kind of a shift to, okay, the economy is maybe not growing as strongly as it was. I have money on account. I'm going to kind of pull back on those estimates. And that's what we certainly saw in the first half of fiscal year 25. I think what we may have seen for first quarter estimates for calendar year 25, the ones that were due in April, is that shift to, oh wait, I want to hold on to that money. So rather than businesses being like, you state tax authority, you hold my money, they're now like, oh no, I want to hold on to my money. And so, yes, Senator, I think that's kind of what is happening. Now, if they hold on to that money and interest rates go down and they feel like they have a good way to use it, they'll be able to use it, and that should spur some growth in the economy. What I always joke about is it can sometimes be hard for us at the department to really know what's going on because, as I said, most of our revenue comes in the form of estimated payments. That estimated payment is a very short piece of paper. It has their name, their identification number, and a dollar amount. There's no, and I've joked about this, there's no little space for a love note to say, hey, DRA, I'm reducing my estimated payment because of X, or I'm increasing it because I've just invested and I know that my liability is going to increase. So we kind of receive those somewhat blind. And we get the information ultimately on the tax return up to 11 months, almost a year later than the end of the tax year. So we're kind of always looking in the rearview mirror. We don't always have great information for what's happening currently, which is why I think it's so important to do what you're doing, Senator, with hearing from industry groups today, the realtors, the restaurant and lodging. They're the ones that are going to have kind of more real-time information. We kind of have our thumb in the air, kind of feeling where the winds might be going, but we don't always have that up-to-date information. But certainly if businesses do start to invest, they believe that their liability to the state is going to increase because of the investments that they've made, then that would be reflected in estimated payments, and we would see an increase in those estimated payments as the year goes on.
Further questions? Senator Roosevelt.
Thank you. Following up on that question about the Fed lowering rates, I'm pretty sure that the banks in New Hampshire basically fully lent out. So, how could that affect the ability of businesses to grow? Would they go outside of state to large national banks, or would they be constrained by the lack of capacity?
I think both situations could happen. You know, and it could be a different calculus for a business that's solely operating in New Hampshire, that's a New Hampshire-based business, as opposed to a business that operates in multiple states and is looking to invest or grow here in New Hampshire or expand here in New Hampshire. They might have access to capital outside of New Hampshire that is more readily available if the banks in New Hampshire are fully lent and they don't have the capacity. So it could be very different, I think, for each business.
Further questions, committee on the BET, BBT? Let's move on to the meals and rental tax. Any questions in general about this?
Yeah, thank you. Thank you, Mr. Chairman. I have two questions. One, are leased cars included in the tax, or just basically you go to Hertz and rent a car for a day?
Right, it's more of your traditional car rentals. So, and similar, the same analysis can be applied to rooms as well. So like a hotel room or a short-term rental, less than 6 months would have the meals and rentals tax applied to it, but a longer-term rental would not, or a longer-term lease in the case of the cars. So yeah, motor vehicle rentals, that 2% of the tax is traditionally your Hertz Enterprise. When we look at how the revenue comes in by counties, or even by location, the majority of the revenue comes in from the rental of cars at the airport in Manchester.
Mm-hmm. And if I can ask another question, to what extent is business travel, which would contribute to the M&R, related to the performance of the business taxes?
That's a good question. I don't know that I have a specific answer for that. I know years ago we did look into whether the First in the Nation primary had a significant impact on M&R revenue, right? So comparing years with the primary and without the primary for those months surrounding the primary. And it actually wasn't as much of an impact as we thought, because I think in many cases, the rooms that would be rented in hotels or the meals that would be served at restaurants would probably be served or rented anyway. It's just the folks that come for the primary kind of take up those spots. But when we look at M&R revenue, the majority of the revenue comes in from full service restaurants. So that's going to be a combination of people on business travel, but also those like you and I that are just going out to eat on a Friday night. Where we've seen significant growth in the past few years have been in the form of more like short-term rentals. So think about Airbnb, Vrbo, those sorts of ways that people are staying on vacation here in New Hampshire. That's grown significantly since the pandemic, because in a lot of ways that was the best way to travel during the pandemic when hotels couldn't necessarily operate. So I think generally it's a combination, and it is one of the ways that I think New Hampshire, maybe from a revenue perspective, has a bit of an advantage. We are not solely reliant on Canadian tourism. We're not solely reliant on international tourism during the foliage season. We're not solely reliant on business travel or, regional vacationers. Everything kind of plays a role. So if one of those factors does adjust, it won't totally demolish the tax. So I think we have a pretty broad base of essentially usage with the M&R tax.
Oh,
Thank you. So if we see a fall off in international tourism, and I've seen some numbers suggesting we're going to, do you believe that that vacuum will be filled by domestic tourism?
I think it could potentially, but that is one of the reasons why for fiscal year 26, we have a flat growth rate as our low. Because I think we've been seeing M&R grow over the past few years. We're currently just about 3% ahead of prior year, right? M&R, like I said, has been kind of a bright spot with revenues. But if international travel declines and it is not filled in by domestic travel, then that certainly could temper the growth. A very literal or very specific example, I guess, if we don't see a lot of Canadian tourists come, that could be a reduction in revenue. But at the same time, a lot of folks are hesitant to travel to Canada right now because they believe that they're going to be met with some frustration and might not feel totally welcome. That may result in people staying in New Hampshire instead, right? Especially if you're in New England, maybe rather than going to Canada for the summer, for your summer vacation, maybe you'll go to northern New Hampshire. Just cross the border, close enough. So that might result in some filling in that gap that we could see.
Mr. Fair, I did speak with some of the short-term rental people because I know last year I spoke to the Airbnb people. This year I reached out to some them and others.
Yep.
They're still saying that their bookings are on par from last year and the year before, that they're still seeing the growth. There are now more rooms available for Airbnb than were the previous year, and the percentage of booking is still as high.
Great.
So again, I would anticipate that actually they're not seeing a reduction. People
Yeah.
are still pre-booking. The ones that had pre-booking of apartments are still pre-booked again for this upcoming
Great.
summer. So their estimate was that they're not going to see a downturn. They think it's going to be a slight uptick in
Great.
overall revenue. Right, we little flooded the market with Airbnbs and Verbos, but their indication was that number's going up, not
Yeah.
by any dramatic number, but
Right.
between the increase in actual availability, number of units, and
Right.
those units, even though it's increased, are still being filled at the same percentage rate. So that's an uptick.
Great.
So just for what that's worth, or as we look at things like rooms and meals,
Right.
you look at the room size, only 18%. So Airbnb itself isn't necessarily going to see a big giant increase in their revenues to the state as a whole to the tax. But if those same people go out to eat, that's where
Right.
you're going to see the increases on the 80%
That is-
side of
yeah,
meals.
meals. Sure.
Well, then I know that last year, 2 years ago, must have been 2 years ago, we discussed how the rising cost of food by itself was going to contribute to an increase in the revenues. But I think maybe
Right.
people are drinking less in restaurants because the food's gotten so expensive.
Any other questions on meals and rooms? We'll move on to the next one. So we can tobacco tax. Any questions on tobacco tax? Senator Roosevelt?
Thank you. I have a couple. One, there's good data that smoking rates correlate with substance use and mental health illness. Seeing as we're seeing a rise in mental health problems, and we're still in the throes of an addiction crisis. How do you see that impacting tobacco use?
So what we have seen, as I said, our stamp sales continue to decline. But our other tobacco products are increasing. So what we may be seeing is just a shift from traditional cigarettes to e-cigarettes and other tobacco products. The difference there is that e-cigarettes are not taxed at the same rate as traditional cigarettes. And so if you switch from smoking, packs of cigarettes to utilizing an e-cigarette device, you're going to pay less in tax. And so that might be a bit of what we're seeing as well, is just moving to a different product that's taxed at a lower rate.
Thank you. How do how does our tax rate for e-cigarettes compare with surrounding states?
So I can get you a chart that shows
It's
you.
going to be complicated, right?
It's complicated.
Close.
Correct. So e-cigarettes in New Hampshire and in many other states are taxed differently, whether they are an open system where you buy the liquid and you insert the liquid into your own device that heats it and creates the water vapor, or if you purchase a closed system, which looks more like a pen that has everything contained in one, and when the liquid is gone, you throw this out. Those are taxed at different rates in New Hampshire, and then they're also taxed. In some states, the open and closed systems are taxed differently, and in some states, they're not. So it is a bit of a difficult comparison. But for instance, in Vermont, the tax rate on e-cigarettes is much higher. And so I can get you a chart. I actually have it in my bag.
Just of surrounding states.
Of the states, sure.
Thank you.
Any further questions on tobacco tax? So I have one, Commissioner,
Yeah.
again. So as you know, we're have a bill to transition enforcement on this over to liquor.
Mhm.
So that they currently manage the retail side, but they're not managing the manufacturing side, and yet our tax occurs at the manufacturing level, not at the retail level. So do we think that in the conversation around that bill, we talked about the fact that we think we'll capture more taxes based on doing that? Because they're in the store doing the retail side, and they can, all right, they pull up an invoice, where'd you buy this product, and find out if the person they bought it from was a licensed distributor manufacturer who pays the tax. Do we think that's a true statement still, that we believe there'll be a greater enforcement efforts will yield more tax revenue?
Certainly. The more eyes that are on the product to make sure that the proper amount of tax is paid, the better. And so I think that will happen. So just a little bit more background on what Senator Lang is speaking to is that the tax is pre-collected by the wholesaler, essentially on behalf of the customer. So the customer doesn't pay the tax at the retail location. So you go into your neighborhood store and you buy an e-cigarette, for instance, or a pack of cigarettes. You're not paying the tax individually at that time. The wholesaler that provided that product to the retailer has already pre-collected that tax. It makes it easier for us in terms of tax collection because the universe of people that we're collecting from is less. But to Senator Lang's point, from an enforcement perspective, you have a lot of retailers and you need to make sure that all of the product in their stores has the tax paid on it. And so expanding enforcement to the liquor division or to the enforcement unit at liquor will just help with compliance with the tax as a whole. And so I do think that will help to increase revenues.
Following up on that, thank you. The current version of House Bill 2, as you know it, removes the Liquor Enforcement Division. So to what extent will we be able to expect local law enforcement to enforce that? I guess they'd be the ones enforcing it.
So, right, so we have two kind of competing policy ideas here. As things operate today, the Department of Revenue works closely with liquor enforcement because they are the ones in the stores doing compliance checks for the purposes of making sure their retailers are selling product appropriately. So when we go in for a tax enforcement perspective, we will often utilize their services as well because they are licensed law enforcement and we're not. So we work very closely with liquor currently. So in House Bill 2, if the enforcement division of liquor goes away, we will still keep doing what we're doing, but we will kind of lose one of the tools that we have in the toolbox for ensuring compliance with the tobacco tax. Under the bill that Senator Lang was discussing, obviously the enforcement division would be maintained and their duties would be expanded to also help us with compliance with the tobacco tax. So either way, there'll be compliance with the tobacco tax. In one scenario, it will be much more compliant. In the other scenario, one of our tools in the toolbox will go away.
Any other questions on tobacco tax? Seeing none, interest in dividends. I think everyone should be fine with
Does
this one at
anybody have
this
any
point.
questions?
We can move on to the next
Okay.
one. Let's talk about the real estate transfer tax.
Sure.
Yeah. On the real estate transfer tax, the same question we talked about on the businesses, right? So the Fed's going to reduce their, by the end of this year, they expect to be down to 2.5-ish from what, 4 something they're at now. Again, you believe that'll be an impact and will spur, because mortgage rates will drop and spur more transactions occurring?
I think so, because I think the higher mortgage rates have certainly put a damper and in many ways essentially priced people out of the market, even if they wanted to purchase a home. The home prices are so high, and then you talk about that higher interest rates, it's just not achievable for many families. So lowering the interest rate should open up the ability for more people and families to afford to move. The question there still becomes, many of us have the advantage of a very low interest rate because either we purchased our home when interest rates were very low or we refinanced during the time that interest rates were low. And so the difference between, I think currently the difference between what many people have as an interest rate on their mortgage and the prevailing rates currently, it's just so high. There's so much of a difference there that it just doesn't make financial sense for a lot of people that already own a home, never mind the people that are trying to get into home ownership. So lowering the interest rates will help those trying to get into home ownership and will make it less of a financial burden for those that have a low rate that would be looking to purchase something new. So I think it's good overall. We just need the inventory there for folks to be able to buy.
One second, let me just follow up on that statement. So again, I always talk about the affordable home price,
Mhm.
right? And talk about affordable homes. And, you know, again, 2019, we were looking at 3% interest rates and 2.5% interest rates. A $400,000 home would cost you a mortgage rate around $1,700.
Right.
That same house now with a 7% rate is $2,800.
Right.
You didn't change the price of the house, you just changed the interest rate. And that's what's driving people out of their home, well, not making it so that people are buying homes, is because now their mortgage rate is so high as a percentage of income, it doesn't make it affordable for them anymore. So I'm a big believer, and I think as the mortgage rates come down, more people will be eligible, will be able to buy a house. Again, the median home price in New Hampshire right now is sitting at $515,000. So again, I think that, and there are houses under that people could get into, but the mortgage rates are so high,
high.
they're being priced out based on the interest rate, not on the value of the house.
Right.
They're also being priced out because of local property taxes that keep increasing and crushing.
Awesome.
Thank you. Thank you. So across the street from me is this 23 housing development going up. And the homes are starting at 850,000. I've been in one. It's not very impressive. I've looked at how the construction is. It's not impressive. But the developer believes that a lot of the buyers will be people who are paying cash, moving from other states, or they're older, they've paid off their mortgage.
Yeah.
Do you have any sense of what the cash purchasing of
Sure.
housing in New Hampshire is?
I only have anecdotal evidence. I'm certainly hearing that. We heard about that during the pandemic as well, when people were trying to move out of populated areas into less populated areas like New Hampshire, and that they were coming with cash. You might hear more about that when you hear from the Realtors Association. And again, I think those are great opportunities because they are the ones that will have more of their thumb on what's currently happening. But certainly to the extent that there are cash buyers, the interest rates may or may not impact, changes in interest rates may or may not impact their actions. But I think, back to Senator Lang's point, I think there are plenty of people where changes to interest rates would change their behavior at this point.
We have a pending bill that's going to reduce that utility property tax by about $11 million if the bill passes. So that number could fluctuate. But the status of that bill, I think we're actually voting on it today as one of the bills.
Yeah.
The House version of the Senate version we already passed. But just understand the utility property tax may see a slight decline on that line. But you'd also turn around and see an increase in, well, not an increase, but swept change as well. Because as per that bill, any utility that's currently paying utility property tax is exempted from paying the swept tax. And once we take away their paying utility property tax, they'll then pay the swept tax instead.
That's correct.
That doesn't generate it.
Doesn't generate any more money. It's still, so.
That was my question, was about that.
Yeah. So, anything else for the commissioner?
Just want
Good.
to summarize a little bit. Thank you, and thank you
Yeah.
for taking my question.
Sure.
So just looking at this, below plan is business profits tax, business enterprise tax, tobacco tax, interest and dividend tax is gone, communication tax is down, real estate tax is gone, or down. And that's due to, travel is down, cross-border elasticity, which you said. People aren't smoking. The housing market is questionable with inventory. And meals and rooms is up, utilities up. Are you concerned at all?
I will say that I have been doing revenue estimating with the department in various capacities since about 2010. And this is the hardest revenue estimating that we've had to do. So I'm concerned in a way that I like to come in here really confident in my numbers and confident in where I think things are going. And at this point, the level of uncertainty has taken my confidence to probably the lowest level that it's been. So, am I concerned? I mean, I don't know that I'm necessarily concerned because I think we saw such a tremendous growth in taxes following the pandemic that I never anticipated that growth would continue right into perpetuity. So I think that I anticipated this resetting to happen at some point, and certainly all indications is that it's happening, and I think we understand generally why it's happening. So I'm not necessarily concerned, but it's just a period of time that it's just difficult revenue estimating. It's difficult than what we've seen in past budgets.
So just follow up, not necessarily concerned, but confidence is very low.
Yeah, there's a lot of uncertainty. And like I said, where most of our data comes, I'm looking in the rearview mirror. And so I can look at how the taxes generally perform, what the trends are like, but the conversations that you're going to have with certain trade organizations, I think is very helpful to informing, like they're the boots on the ground. They know what's happening on a daily basis. Because like I said, no one's sending love notes to the revenue commissioner telling them that they're going to pay more or less in the future. We'll just have to see when that revenue comes in.
Thank you.
Again, so we're not looking, the thing is where the trajectory has changed. It's not that it's not increasing, it's just that we're used to $500 million surpluses, right? Because of
Correct.
such great growth and money, but we're not going to see that, not because there's been a recession or a pullback, just
Correct.
because number one, it's been normalized differently now, the numbers.
Yes.
And then number two being, we still expect growth in New Hampshire. It's just not going to be at the same rates that we've seen in the past.
Correct. So for business taxes, for example, if you kind of remove the years of the pandemic and the years following the pandemic, you go back to say fiscal year 2019, Fiscal year 25 is going to end roughly $200 million more than fiscal year 19. And that's roughly a 4 to 5% year over year growth in business taxes, if you just were to like graph it out. What we saw was just such a significant increase that we're now kind of back to the more normal curve that we would have seen. It's just the pandemic caused things, we dropped and then we increased. And so when you remove that noise, we're on a fairly, what would have been a normal trajectory for many of the revenues. We just saw those revenues increase during the pandemic and after the pandemic for a variety of reasons that are now back to their more normal behavior.
Thank you. Any other questions? Senator Oswald.
Thank you. To sort of follow up on Senator Fenton's question, some economists are now predicting that a recession is more likely this year. In what fiscal year would we see the effects of a recession this year?
Sure, good point. So that it all depends on whether businesses reflect any recession or any slowing in the economy in their estimated payments, which I think we're seeing a little bit of, as opposed to businesses continuing on and then realizing that their liability for the year is significantly lower than they estimated and asking for a refund when they file their return. So I actually read an article the other day that, especially for states, which this doesn't impact us, but especially states with a broad-based sales tax, the author was kind of cautioning that things might look good and you might feel like you're performing well and that you might not see what is happening in the economy until kind of it's too late. So where we're seeing the tempering of the estimated payments, I think that's kind of a real-time adjustment in what's happening. But to the extent that there are businesses that just keep making their estimated payments and then again realize at the end of the year, oh gosh, I way overpaid and I want that money back in my pocket, not for you to keep, we would see refunds in that case. So it can depend. Historically, when there's an economic slowdown or a recession, New Hampshire does not fall as far as other states, but we take a little bit longer to recover. And that's just generally due to the makeup of our taxes.
Great. I also was going to make, and we're also, during that, all the noise you were talking about going on due to
There's a lot
COVID and other things, we were also changing tax rates across the board, right? Which are also going to have an impact, but we're still seeing growth even after the tax rate change. So we lowered the rooms and meals tax from 9 to 8.5. We lowered business taxes, lowered the BET, and yet the revenues are coming in at a percentage rate that's still on a growth trajectory right now, with limited exceptions, things like tobacco, which
Yep.
we understand that's a societal change, not an economic change.
Yep.
Great. Thank you very
Thank
much,
you.
Commissioner. Charlie, you're up next, and I hear you're bringing me good news.
Feeling really good news.
I thought Lindsay was. Charlie, go ahead and introduce yourself and your friends.
Good morning, Mr. Chairman, members of the committee. I'm Charlie McIntyre, Lottery Director. With me this morning is our Chief Program and Product Officer, Kelly J. Cleland, and our Chief Financial Officer, Jim Duras. Kelly J, or as KJ as she's known, is responsible for all the revenue you folks spend, and Jim is responsible for counting it. And so that's their roles here this morning. What I'm presenting to you are two different things. The first is the presentation we made to House Ways and Means, which details our history of growth and revenue over the last years. And as you can see, it's essentially been hockey stick growth, which is good. But the last slide is essentially that we had estimated back in the fall, 133 net revenue or distribution to education. The more important, and certainly the one you're going to like better, is the second document, which is a single page, which we are revising our revenue estimates upward for the biennial budget for $193.5 million for 26 and 27. Yeah, 26 and 27, 26 and 27.
It was.
Which is a $20 million increase over the original estimates we gave in the fall with, originally with the House, and is a $10 million increase over our more recent adjustment. Moreover, we're going to increase our revenue expectations for this fiscal year to $200 million.
So I said that number, the overall,
So the overall, so this fiscal year 25, we estimate $200 million of net profitability, which is an increase. I think plan has us 168, and I think our revised estimate has us at 180. But we expect to get to 200 million this fiscal year. And then for the next 2 fiscal years, to be at 193.5 million each of the fiscal years. So, and you can see how that's roughly broken out. Instant games and draw-based games have retracted a little bit, similar to Commissioner Stepp's suggestion of a pullback in retail. We've had a pullback in store sales, scratch tickets and Powerball sales. But we have had a significant increase in historic horse racing, which makes up for the vast majority of the difference. And so that's a long way of saying we're sending you more money. So we're here to answer any questions you have. I know you're a little behind, and we have half an hour, so happy to answer questions, all 3 of us.
I just remind members, when we do revenue estimates, we're doing it based on current law.
Yeah.
Right? So while we have gaming in the budget right now, which will increase our revenues, that's not what we're using to propose the revenue estimates. Once we send the revenue estimates to the finance committee will then look at what bills they're putting in and what increases in revenue they generate, and they'll add it on their side. And LBA will carry it as a surplus statement on the Schedule 2 for us to know what bills are pending that are revenue generating, so we understand our numbers in finance. But
Mr. Chairman, to that point as well, our original revenue estimates did not take into account 2 of the historic horse racing rooms, which weren't open yet. When we made original estimates before, the 2 rooms that opened most recently have increased the net revenue. So to your point, we don't estimate based on what we think might happen. We estimate based on what happens.
questions to the committee?
Thank you. Could you please tell us for the current fiscal year and the next biennium, how much you're estimating above the House's revenue estimates?
I believe the House's revenue estimate is 173 for FY 26 and 27. We're estimating $20 million more per year for 26 and 27. I don't know if they're estimating for this fiscal year.
Yeah, for 20, well, their number was 163 and you hit 201.
And you're going
Yeah.
to 200?
And
Yeah, we're 200.
the House's estimates were 172.9 for 26, and you're at 193 now.
Yep.
And then their estimate for 27 was 172, and again, you're at 193.5,
Yes, so 20 million
For
plus.
this fiscal year, what was the increase?
$40 million.
40.
It's just shy. It was a $38 million increase.
Yes.
Over the House estimate
Okay.
and the Senate estimate.
And I can only suggest to you that after careful consideration of our sales and finance team, we're comfortable with those estimates.
Further questions on,
Mr. Chair, can I just clarify something? So the House Ways and Means Committee estimated $172.9 million each year in 26 and 27 for the
thank you.
lottery. The Finance Committee bumped that number up to 185 in 26 and 27, so they gained at that point $12 million each year. So the difference is the 185 to Charlie's new number of 193.5 is what hasn't been accounted for.
Okay, so that's like not 40 million,
Right,
it's 14 million.
right. It's a lesser number.
I'm sorry, give us those numbers again for, you talking about.
So
25?
for 26 and 27, the House Ways and Means Committee had projected $172.9 million for lottery. the House Finance Committee and then ultimately the full House voted to raise that to 185 million each year. So Charlie's number today is 193.5, so the difference is, what, 8 million, 8.5 million a year, so it's about 16 million
So
over the biennium.
16 million for the biennium.
Well, 185 and 180, I mean, it was 185 for both years, 27, 6 and 7.
Yep,
And then Charlie's differential is what we're talking about, 7.5.
and he goes up to 193.5 in each of those 2 years.
So that's 16 million above the house for the
For the
biennium.
biennium. Further questions? And understand that number's gonna, depending on what we do with HB2, will go up. The estimated revenue numbers for the gaming provision in there is a bump of around 31 million in the first year, and then 19 million in the second year on top of the 31 as an more additional. But we'll deal with that in the finance committee.
I would also suggest that one of our facilities is opening in June, another gaming facility in Salem. So I may have revised, we may have revised numbers in June. Not sure if it's enough time for you folks to recognize them.
Great. Anything else, guys? Not easy, Charlie. When you come in and tell us we have more money, we like you.
Thank you, Chairman, members of the committee.
All right. We're now a little bit ahead of schedule. Mr. Summers, you willing to, is Mike's back there somewhere? I can't see behind Charlie. Actually, Mike, if you don't mind, we're gonna take just a 5-minute break. And then we'll start. So we'll take a 5-minute break. You can use the restroom, do what you need to do, and I'll be right back. All right, we'll get reopen and welcome Mike Summers to talk to us about hospitality and tourism.
Good morning, Mr. Chairman, members of the committee. For the record, Mike Summers, President and CEO of the New Hampshire Lodging and Restaurant Association. I'm not sure that I'm going to present anything to you that you probably don't already anticipate or expect, and I would suspect Senator Murphy probably has better information than I do. But I will share with you what I could find. I did a bunch of research. I would also like to put a shout out to Brian Gottlob at the ELMI state agency. He helped me find a lot of this information and shared it with me, which is extremely helpful. But you know, as economies go, usually the restaurant industry, tourism also are kind of leading indicators of where the economy is going. And I think what you're going to see from some of this data is that I think we're in kind of a tough spot right now, particularly our industry. I will also say that as a general rule, our industry is still recovering from COVID. And I know people are probably tired of hearing that, but it's frankly true. We were so devastated during COVID. There are a lot of these businesses still carrying a bunch of debt. Many businesses, particularly on the lodging side, they still haven't recovered all of their staff that they lost pre-pandemic. So there are a lot of challenges within the industry. But that said, the first graph I presented you with, U.S. leisure travel has been weakening since at least Q4 24. And frankly, after we saw that huge bump after COVID, 23 was still pretty good. 24, we were just barely flat with 23. And I anticipate that where we're going to end up as we go through this year is probably going to be about flat, honestly. So, consumer sentiment is down, driven largely by prices remaining high, uncertainty resulting from tariffs, market volatility, et cetera. I assume you all saw this morning, too, that it was reported this morning that the economy contracted a little in Q1 of this year, which actually was not a surprise to me based on some of the information we're going to talk about. Hotel occupancy, the best forecast I could find is that second graph on page 1. Looks like for the most part, each of those segments is probably going to be flat through the balance of 25 and into early part of 26. Leisure customers appear to be downsizing. So, for example, we're starting to see that, mid-tier lodging type consumers are trading down to a cheaper option or maybe switching to an Airbnb. We're also seeing folks that might normally have flown to Europe or something like that. Maybe they're staying locally this year. That actually, in some ways, actually helps us because we are so heavily dependent on drive-in tourism anyway. So we are hopeful that that's going to be net positive in the grand scheme of things. We've seen hotel room rates are starting to soften. Obviously, that is a reaction to softening demand. So those average daily rates are starting to come down a little bit for at least the last 2 quarters. We suspect we'll continue to see that across the course of this summer. Canadians, one of New Hampshire's most important visitor groups. In Q1, Canadian visitation fell significantly. I'm sure you can guess why. They weren't crazy about us suggesting they were going to be the 51st state. They kind of took that the wrong way, I think. But anyway, so we've seen that that group has dropped off quite significantly. We've heard from a lot of medium, small properties that Canadian tourists who have come year after year after year with their families have called to cancel their reservations. So that's been somewhat of a concern. Not everybody, but there has been a respectable portion of them that have done so. If you look at rooms and meals tax on an annualized basis, we are starting to see that soften a little bit. So that obviously is a concern, driven primarily by rates or by gross sales. Hotel occupancy, as you can see, I have another graph here just showing where it's anticipated just in the grand scheme of things. Gas prices, again, is a pretty heavily dependent drive-in state. Gas prices have a big impact on whether folks come to New Hampshire. And we did see when the price of gas was, $3.50 a gallon or more, that did impact. And we saw a lot of folks just didn't come. We also saw that they didn't, use their boats on the lake and those kinds of things. There was definitely an impact there. So if prices stay at where they are or even down a little bit, the price oil barrel prices actually went down a little bit last overnight, I think. So that if that stays in that range, I think that will be positive for New Hampshire's tourism. On page 4, we're looking at Restaurant Performance Index. This looks at a variety of factors, but as you can see, February, it kind of took a pretty significant drop. So there, again, it's driven by consumer sentiment, it's driven by same-store sales and those kinds of things. And then retail spending is slowing, and restaurants are usually a leading indicator. And as you can see, that's dropped down quite a bit over the last 6-8 months or so. So what does that mean? So I guess in the grand scheme of things, the next 2 years, as I've talked to business owners, most of them don't really know what to expect. Too many factors to really absorb and build into their modeling. But obviously, uncertainty around tariffs, what that's going to mean for impact on goods and cost of goods, consumers being more cautious in their spending. Again, prices haven't really come down a lot, particularly in tourism, hotel rates, prices of meals, et cetera. So that's having an impact. Gas prices hopefully will stay low. If that's true, then that will certainly help our summer season. One thing to note as you look at 2026, FIFA is coming to Massachusetts, and that's expected to bring millions of people to the area. So I think that will actually have a net positive for us because I think we will get that spillover effect. And obviously, Division of Travel and Tourism will be marketing aggressively in that market to draw those folks north to stay in our hotels and visit our restaurants. And I think the bottom line is that the businesses on my board and others that I've talked to, most of them are going to be super excited if they're flat or slightly up this year. And then 2026, they'd like to see a little bit of growth. But again, I think that's a bit far out for them just based on the nature of everything that's happening in the economy. So, and then I think the one thing that always drives tourism in New Hampshire is the weather. And I hate to give a weather report this far in advance, but ultimately I think if the weather is nice, it's warm, we don't get a ton of rain on the weekends, we're going to have a great season. If it's the opposite of that, not so much. So I'm not sure any of this is helpful, but we're happy to talk about it.
Great. So I do, again, just a couple questions. New Hampshire specific, a lot of these graphs are talking about national trends and what's going on nationally. Again, when you problem with national trends is you're dealing with, states like Nebraska, which might be a beautiful state, but probably isn't a big tourism state, except when the Nebraska's in the playoffs. But for New Hampshire, again, I think you might have been in the room. I don't know if you were. I was talking to the short-term rentals people, and they're saying that their bookings, and while they have more units because more people have signed up for Airbnb or Vrbo to be hosts, they're still seeing the same percentage, if not slightly uptick, very slight uptick in people sticking around and pre-booking what they're planning on doing. Is that kind of what you're seeing? Is that the pre-bookings for New Hampshire are still there being a tourism state? It's not growing by any dramatic leaps, so it's also not necessarily receding either. It's staying level or again, tiny percentage, couple percentage point increase maximum.
Yes, I think that's probably accurate. In talking with hotels, I think most of them are saying that their summer bookings are kind of what they had from last year, so kind of flat. I think that there is a little bit to the short-term rentals. I think there is a little more capacity in the system, but we're also seeing some additional hotel rooms come online over the next, 12 to 24 months. So I think that's probably true. I think where we are a little bit concerned is, I think rooms and meals tax for the most part have been propped up for the last, call it 12 to 18 months. And a lot of that is based on price points. So as hotel room rates jumped up as a result of inflation and menu prices in restaurants jumped up as a result of inflation, that has really kind of propped up the meals and rentals tax. That doesn't necessarily mean that we are seeing same store sale growth. When you talk to most restaurants and they'll say, I'm up 10%. I'm saying, great. What does that translate in new customers through your door? And most of them are saying it's not. It's all price point for the most part. Senator Murphy, you can tell me if I'm wrong, but I think that's what I'm hearing. And I would say that hotels are about the same. Similar bookings to last year. But, I had hotels text me last summer and say, where is everybody? Because it was very quiet on the lake in certain weeks and those kinds of things. So it has not been busy in 2024, and I'm suspecting it's not going to be crazy busy in 2025.
Well, that's not gonna be good for that new five-star hotel opening up in Tilton on the lake. But
Well, I will, that's a great point, because one thing I will say is that there are certain demographics that are a little bit immune to this, right? And I would say at that upper level, we are seeing that, fine dining restaurants and upscale hotels, et cetera, they are not necessarily seeing a pullback from consumption. What we're seeing it is from that mid-tier group and below. That's where people are trading down a level or two. That's kind of what we're seeing.
Senator Murphy.
Question, have you heard from any operators about a reduction in alcohol consumption, especially maybe mid-20s to mid-30s
Yes.
demographic?
Yes, we have definitely heard that and seen that. A variety of things driving it, I think. Obviously, we suspect that the younger demographic doesn't consume at rates that historically were the case in that younger demographic viewpoint. But we are also, the suspicion on the behalf of many of these operators is that many of them are experimenting with cannabis and alternatives, and so we're certainly seeing that. But I also would say that there is a renewed effort around mocktails and those kinds of things, and so I have friends in the alcohol industry who are telling me that sales are down significantly, both beer, wine, and spirits. So this is not just one segment; it's really kind of across the beverage alcohol market. So, yeah.
Senator Rosenwald, then Senator Sullivan.
Thank you. You said some more hotel rooms will be coming online. Will that be enough to maybe dampen the pricing of hotel rooms through more competition? Or is it all that big five-star resort in Tilton, which
Well, that's.
I will never go
Yeah.
to, yes.
And it's going to be a beautiful property when they're done, if you've seen the mock-ups. But I don't know that one property will have that impact. But I do think that weakening demand, and again, we're not talking about a cliff here. We're talking about it's just softening. That softening in demand is going to essentially contract rates because people will be competing for it. And so as a hotel operator, obviously you need to occupy most of your rooms to be profitable. And so as those occupancy rates continue to shrink or soften, they're going to manipulate pricing to try to draw people to their particular property. So that is what I think will ultimately bring the prices down. But we're not talking dramatically here. We're talking a couple, 3, 4 points maybe. We're not talking 25% or anything like that.
Thank you.
Senator Sullivan.
You said FIFA is coming to Matt. I don't know what FIFA is.
Oh, I'm sorry. It's a big soccer thing.
Oh,
Yeah, my son's all into it. I couldn't explain it to you, but it's a part of the World Cup, I think. It's a regional, is that what it is? Anybody else know?
So it's soccer. Yeah, again, they're building, it looks like in Revere. I think it's going to be over that side of just north of Boston. They're building a MLS, a Major League Soccer stadium, and that's going to be supportive of that.
Yeah, there's going to be some regional matches there, which is anticipated to bring millions of people into Massachusetts. And so obviously we'll hope to benefit from that.
all right, great. Thank you.
Any further questions? So the Revolution, which is the Major League Soccer team there, plays currently they have to share the facility at Foxborough, and they're getting their own. That sport is growing pretty significantly. So they decided they wanted their own stadium rather than play at Foxborough. So they're in works on the north end of Boston, just outside of Boston. There's supposed to be a new facility built there. So
Some controversy about whether we'll go through, but
we're trying to get them into Salem, but I'm not sure that's going to work. So
yeah.
yeah, we need to give them some water to do that.
Well, and Salem would have parking, which I think the facility they're looking at doesn't have any parking at all, which I'm not sure how that works, but
Great. Any other questions? Seeing none. Thank you, Mike.
thank you.
And Realtors Association, come on up. Thank you.
Thank you.
Whenever you're ready.
All right. My name is Bob Quinn. I am the CEO of the New Hampshire Association of Realtors. So I'll give you a quick rundown of what's happening in the real estate industry. The first thing, and you'll see in the chart in front of you, the first page, just to try to, sometimes we'll talk to folks and they will mention that they saw a national headline about the housing and what's happening in the United States. And I just want to point out, and then this chart kind of demonstrates that, what's happening in New Hampshire, what's happening in New England and the Northeast is very different than what's happening in the rest of the country. So this chart shows that between March of 2019 and March of 2025, housing inventory, residential housing inventory dropped by 60%. During that same period of time, Texas increased by 20%. Florida increased by 16%. So as you can see that when you sort of aggregate this information nationally, those two states, the second and third largest in the country, those two states kind of warp national data. So what's happening in New England is really different. If you go to the second slide, this is something that came out last week from Realtor.com. So this is what they call their affordability and home building report card. This is trying to get at a sense of housing affordability in every state and also sort of a projection of where it's going. And then they graded each state. New Hampshire was at a C-. There are only 7 states in the country that were lower than New Hampshire. But again, if you look at the Northeast, all those states mostly had very low grades, whereas in the South, affordability, availability is much greater. So having sort of at least laid that out, so if you read headlines in the Wall Street Journal or New York Times about the housing market nationally, just keep in mind, probably doesn't relate to what's happening here in New Hampshire. So the next slide, so the top part of that is the residential gross sales. So that's all single family homes, condos, and manufactured homes. And the second line is sort of the real estate transfer tax, which is probably what you're interested in. And you'll see that between 2013 and the peak, which was in June of 2020, residential sales increased by 149%, while real estate transfer tax increased by 114%. And largely that's because residential real estate makes up, we think, somewhere between 65 and 70% of the total real estate transfer tax. The rest of it is commercial and non-residential, which we also include as land. But at least what you'll see here is generally the trend for residential gross is very similar to what happens in the real estate transfer tax. Had a little blip there in 2021, but otherwise, as residential gross has gone up, so has the real estate transfer tax. The reason why I mention this specifically is we have robust residential data. Commercial data is a little bit harder to come by. I will tell you that in my conversations with our commercial practitioners, they are, basically the message was they see more of the same, what happened in 2024, what they see in 2025, industrial, retail, even the office market in New Hampshire is pretty steady at this point. We haven't seen the kind of declines in desire and interest in office space that certainly larger cities like Boston and New York have seen. It's held pretty steady. So then the next slide, you'll see this is past 10 years in terms of the top is the closed sales of residential, again, single family condo and manufactured housing. And on the bottom is the median sale price. This is, if you look, for instance, on the top, you'll see a little box there that says August of 2024. So that means, that signifies what happened in August and the 11 months prior. So it's a 12-month look back for this. And the reason for that is it's a little bit easier to see trends. Otherwise, you'll see another chart later on. Because of the seasonality of housing, summertime, things go up. Fall, winter, they drop. It's a little bit difficult and challenging to see the trends sometimes. But as you can see, as housing sales have declined pretty dramatically since 2021, median sale price has continued to increase. I think what you also want to look at is on the closed sales. You'll notice that while we dipped down in 2024 to our lowest point, there has been a steady increase, very small, couple of percentage points since then. The next chart is same idea, but this is the gross dollar volume. And again, you'll see that there was a dip starting in late 2022 that I think probably was attributed to significant increases in mortgage rates. We started to lose those 3.5% to move up to 7%. That did impact, we think, the residential market in the state. But over the past year, we have seen a steady increase in the gross sales on the residential real estate. The next chart is a little bit longer of a look back. These are the number of homes for sale. These are by month. So you can see that starting about 2011, there has been a significant decline in the number of homes for sale inventory available in New Hampshire. During the COVID era in 2020, you see we didn't have a little bulb in the summer months. We saw a significant decline due to COVID in terms of closed sales. But what's important is look at the couple of years behind that. We were sort of on the path downward. COVID kind of caused us all to sprint a little bit ahead, but we were on the path anyway. We've seen a decline. If you go back about 10 years, summer months, you might see in the vicinity of 11,000 homes across the state on the market. This past summer, we barely hit 2,500. So it's about an 80% decrease in the past 10 years of housing inventory. The reason why the real estate transfer tax, though, I think has kept up is because even though the sales have closed, the prices have shot up. And that's really been the issue. Housing affordability is the next slide. I just wanted to bring this up. Both the New Hampshire Association of Realtors and the Massachusetts Association of Realtors use what we call an affordability index. It gauges how much median income and median sale price on prevailing mortgage rates. And as you can see that right now, New Hampshire is about an index about 58. That means New Hampshire's median income is only 58% of what it takes to purchase the median sale price, meaning that a huge amount of New Hampshire residents could not afford what is the median sale price, which is last month was $515,000. New Hampshire has always been ahead of Massachusetts in terms of this affordability index. You go back to 2020, you can see they dropped below 100. We were at about 115, 120, a little higher than that. The gap, though, has been shrinking as over the past 5 years, as prices in New Hampshire have started to increase and inventory has decreased. And then the last chart is just a look back since 1998, median sale price as well as units sold. The column on the right, which says DOM, that is days on the market, that's probably a pretty good indicator of demand for housing in New Hampshire. So the lower the number means those houses are selling faster. So you can see in 2024, we were at 28 days. You go back 10 years and you were closer to 100 days on the market. So demand is still high. We do think that generally we're going to see in terms of 2024 to 2025, a slight increase in closed sales. It may only be a couple of percentage points, but as you can tell from the change in price, last year we had an increase in residential single-family homes of 9.5%. That has been pretty consistent over the past 4 years. Do we think that might come down a little bit? Yes, but it won't come down significantly, is sort of the anticipation moving forward throughout in 2025. And that's really has to do with the lack of inventory that we're seeing across the state. So that's kind of a generally how we see the housing market in New Hampshire, and happy to take any questions if you have them.
So Murphy first, then
Thank
Senator
you.
Sullivan.
Understanding that many things are beyond our control, how do we get green on this map?
So the way that we're going to move, if you go to that first chart, and then we're going to start looking a little bit more like some of those southern states than some of our neighbors, is we have to have more housing inventory. That's the only option to start moving those numbers. Keep in mind, if you look at some of the other, pick any of the charts, and you can imagine back in right before COVID, even during COVID, interest rates were, I knew people who were getting sub 3% mortgage rates, sub 3% mortgage rates. Even while that was occurring, prices were skyrocketing, inventory was dropping. So mortgage rates have a play, certainly in all of this, but it's not anywhere near as significant as creating more housing inventory in New Hampshire.
I'm going to follow up on that and then we'll go over to you. So I want to stay on that topic of interest rates and how it applies to housing. Doesn't it also, again, looking at the decline of inventory, right? I think we were talking about spec houses, right? It used to be back in the 90s and 2000s, or developers were always building spec houses. Development, they didn't have a buyer for the house, and they decided to start building the house, and they hoped that sometime after the development, they were able to sell the house and make enough money on it. But we don't see that very much anymore. And is that a function of interest rate and this affordability index? Again, when you're looking at, we used a $400,000 example, earlier today, a $400,000 house in 2019 at a 3% mortgage is an $1,800 mortgage, which puts you in the affordability range for salaries. And now that same house with a 7% mortgage is $2,800.
Right.
Didn't get any more house, still spent $400,000, but you got a much higher mortgage rate, which bumps you out of the affordability index.
Right.
Does that also apply to developers when they're building a house? Again, they got to borrow money to build, and as interest rates and inflation rates are higher, that's going to restrict them from building, which is causing some of our inventory problems.
I think that's absolutely fair, that the higher interest rates are creating problems for home builders in providing a more affordable product. I will just add, because our National Association of Realtors chief economist always says this, when you're looking at the difference in interest rates, and you look at mortgage rates, he says don't follow interest rates when you're looking at where mortgage rates are going to go. But actually, those aren't really particularly connected. You want to look at the 10-year Treasury bill, and that's going to give you a better indication of where you're going to see mortgage rates go. What they have indicated, I looked this morning nationally, so I think you could certainly get lower rates than this, but nationally they were saying about 6.9% is where we are in terms of the 30-year loan. I've heard several months ago there were predictions, our economists predicting somewhere between 6 and 6.5%. We might see in 2025. I don't know if that's still going to be the case moving forward. But one message they're saying is the sub 6% mortgages for the time being, for the foreseeable future, we're not going to see those. So yes, mortgage rates might have an impact on affordability, but I think anybody who's sort of counting on mortgage rates coming in and changing these numbers significantly in New Hampshire, I think that's unlikely.
Thank you, Mr. Chairman. Thank you for taking my question. We've seen actually a dramatic increase in inventory in the state. I represent Manchester and Litchfield. Both are building. Litchfield is doing a great job increasing the residential housing. But it's just certain towns around Manchester that are doing the building right now. Derry and Londonderry don't really have much more room to grow. Salem, I think when I visit there, it doesn't even look like the same town. I don't think they have any more room to expand. Are the bills that we have in currently, like SB 84 and the other zoning bills on the state level, is that going to help with the inventory problem that we have?
It would help significantly with the inventory problem we have. There are if you look at permitting data in New Hampshire, unfortunately, I did not bring that with me, I should have, over the past 40 years, you'll see that the number of permits being issued today are not significantly different than they were a couple of decades ago. In fact, during the 90s, we were building more. So even though there's been this housing crisis, We have not seen a significant increase in the number of permits. I think we're at somewhere around maybe 4,500 to 5,000 permits statewide in a year, and that's been holding pretty steady. There are certainly communities, and I would point to Londonderry, I would point to Lebanon, who have really stepped up, and they have permitted a number of new housing units, and those are, what's going to help with this is not just, obviously we like to say single-family homes, but multifamily homes, condos, apartments, sort of an all-of-the-above approach is needed. But there are, as you mentioned, certain communities which have been very resistant to new housing. And if we're relying on just a few communities to supply this inventory, it's not going to work. It has to be statewide. And I think a lot of those bills that have been introduced would move the needle in terms of getting us hopefully out of that C- range and closer to getting a B.
I can't blame people. New Hampshire is the best state to live in, so I can't blame people for it.
Yeah, I would agree.
Senator Benton.
I would agree with my colleague. Are you seeing, do you have data on what is, if there's out-of-state demand for this housing, or is it in-state demand?
So we don't have that information. And I know the New Hampshire Housing Finance Authority does sort of track that. And the reason why it's a little bit challenging is because our multiple listing service doesn't require individuals when they're purchasing properties to put in a zip code of where they're coming from. So you kind of got to go to the registry of deeds, and it's challenging. But what their last report showed was, and don't hold me to the exact number, but I'm pretty close, about 70% of purchases are from people who are moving from New Hampshire to another spot in New Hampshire. So out of state was about 30%. And that will vary slightly, maybe 67 to 73, but it holds pretty, even during COVID, those numbers kind of held pretty close. And keep in mind, a lot of folks in New Hampshire, what we're seeing and what I'm hearing back from folks is they have built up an enormous amount of equity in their homes, and now they're looking to downsize. And so they're looking for something else within the state. They want to stay in the state. I always tell the story about a guy I met I'll say it was in New London, where it was at a housing event. And he had lived in the town his entire life and said he went to every single town meeting, and he always voted against anything that would bring new housing to his community. He was about ready to retire, and he came up to me afterwards and said, I messed up. He said, I have no place to move to now. He said, I'm trying to downsize. I have cash, but there's nothing in New London. There's nothing in the surrounding communities for me to purchase. So he was, that was so hopefully bills like the accessory dwelling unit would give that individual an opportunity to stay in the community that he wants to stay in, that he's lived in his entire life. But it's just an example of some of the challenges I think folks are finding in the state.
One more follow-up. No, I agree that, seniors downsizing is an issue, that there's not smaller houses, because a lot of times they have these massive houses and the kids leave the nest and they don't have a place to go. Any issues with labor and material shortages for building these houses?
So you might want to talk to the home builders about that. But clearly, yes, there are issues in terms of materials and costs and availability in terms of. But I would also say that I know an awful lot of home builders, developers who, if they had the permit, they're ready to go today to meet the housing challenge.
Oswald.
Thank you. I'd like to follow up on Senator Sullivan's question, particularly in reference to Senate Bill 84. If that bill passes, when do you expect new housing would be online? Would it be in this coming budget?
Could be.
What, do you have a sense of how much of it?
So I know I've had conversations with developers who they're ready to go. And if they were given the opportunity to build, instead of, they might have permits that would allow them to build a single residence on a 3 or 4 acre parcel. Now, if they were often given the opportunity now to build 2 or 3 on that same land that they already own, they could put those online pretty quickly. So, we certainly could see, I think, and I would expect that with SB 84 and the other bills that have been put forward this session, there could be an impact with those pretty quickly, and certainly in the next biennium, in terms of creating more inventory. Just keep in mind, the demand is enormous out there for housing in New Hampshire. It's going to get gobbled up pretty quickly, I would expect. We're still seeing very low days on the market. And in certain parts of the state, even though statewide is 28 days, in certain areas, it's a lot less than that. Manchester is always listed on Realtor.com as the hottest or the second hottest market in the entire country. And that's based, and it's, in some ways we want to say, hey, that's great, but actually it's not, because what that means is there's not enough inventory, and that's based upon the amount of homes for sale and the demand. So there just isn't enough homes to meet the demand currently for that.
Other questions? Seeing none? Thank you very much.
Thank you very much.
All right, with that, we've had all of our revenue presentations. My plan is that we will meet next week on 7th, I think it is, whatever the day is next week, and we'll be voting on the revenue projections at that point. We'll go through, so take home all your reading assignments that were presented to us. We have, Sonia, all the letters from the agencies distributed to the members as well. So you should have letters. We had some agencies that didn't come in. DAS gave us an update on others, that kind of thing. But next week, we'll be looking at actually voting to what number we're going to give the Senate Finance Committee to be able to start their budget process with. So, Chris?
Could I just take 5 minutes of the committee's time, hand out the worksheet, kind of go through it for them?
Sure.
So you'll notice it's dated today's date, and I tried to capture all the information that DRA presented to you. So if you flip to page 3, that is essentially their table that they presented to you for their high and lows for the various business taxes. You'll see that for the business tax, the 1063.7 and 25 and the 1102.8 will match what they had on their sheet. So I'm trying to put it in a single document so you have it all in one place. You'll see, the different, for the meals and rentals and the real estate transfer tax, there's a netting effect where you have transfers out of that revenue stream. So it's just to show you how that works. When you flip to page 4, that's the start of your general and education trust fund revenues. You'll see the first 3 lines is the fiscal year 24, the official plan, and then the compared to the annual comprehensive financial report for 24. So you can see the difference in what we actually collected for revenue and what was in the plan. And then for 25, starting on line 7, you have the plan for 25, what the governor's estimates were, followed by the House Ways and Means estimates. And then on row 10 and 11 are what we call the agency high and low. So the only agency that you have a high and a low from is DRA. All the others just give you a single number. And then that just repeats itself for fiscal year 26 and 27. The one source of revenue that you need to make a note for is the lottery revenue, as we discussed earlier. On page 5, row 9, the House Ways and Means estimate was 180 million. The House Finance Committee added 10 million to that, so they had $190 million as their base revenue for lottery in fiscal year 25. And then for fiscal year 26 and 27, you'll see the House Ways and Means was at 172.9. The House Finance added additional revenue of 12.1 to bring them to 185 million. So it wasn't in the official House and Ways revenue estimates, and that's why it's not adjusted on this sheet, because if you were to look at House Resolution 17, that's going to be the 172.9. Where you would have seen these adjustments would have been in the surplus statement, except the House had restricted adequacy or excuse me, had restricted lottery revenue to adequacy. So it all came off the surplus statement. It's just a big negative number. On page 5, you have row N, which is tobacco settlement. I have reached out to the Department of Justice just to confirm if they're still comfortable with the 32.5 million in 26 and the 30 million in 27. You can see that the plan for 25 was 38.5. We actually only brought in 37.7 million for the tobacco settlement this year. And then on page 6, the Medicaid recoveries. I have not reached out to HHS. I can do that, but it's a small number. I don't think it's going to fluctuate much from what you see there, if at all. There was an adjustment made on the surplus statement because the department had indicated if they had additional positions, they could bring in, I think, $1 million over the biennium. I think it's 300,000 in 1 year and 700,000 in the next. But that's not current. That's adjustments. And then the other two fund sources that you'll do revenue estimates for, the highway fund, which starts on page 7. There's no changes from what they had provided to the House. The Department of Safety came in and said that they had no adjustments to make. And the same with fishing game fund. They had no differences from the House position in terms of their revenue estimates. So I just wanted to give the document to you, kind of walk it through. I emailed you a draft document, I think last week. I'll email this again. I'll double check my numbers, make sure I didn't fat finger something as I was sitting here trying to get this together before you left. And if I get tobacco settlement money, hopefully he'll reach back out to me today or tomorrow, and then I'll send this to you. But just wanted to show this. Everything is in one place, though. You have all these documents that have been emailed to you that these are where their ranges are and what they provided for information.
So again, as we leave today and we have the week between us, what I'd like you to do is take this document and given what you heard today is on that line that says, Senate Ways and Means numbers, right, for 25, 6, and 7, is to fill those lines in for all the taxes. And then when we take them up on next week, we'll go through everybody's number and see what our range looks like between the committee, what we think is happening based on what we heard, and then we'll make an official recommendation to finance. So look at that line for line, it's going to be line on page 4, right? We're looking at line 12, line 19, and line 26, right? The Senate Ways and Means estimate is we need to fill in those lines going across on what we think those numbers are going to be. And then when we come back as a committee, we'll see what our average looks like for what that looks like, and maybe that's where we go. But that's kind of.
And just one last comment, all the documents that the agencies have provided you, as well as this document that I just handed out to you, will be on our website. So if you go to the general court main page and you go down to general court updates, there's a link there that says new LBA document, budget and revenue document. You click in there, you'll see there's 4 stacks or columns, and all the way to the right is the revenue document. You click into that and you'll see a tab for Senate, Senate Ways and Means Committee. And go in there and you'll find the documents that the agencies have provided. So hopefully that's helpful. And if you have any questions, I'm available.
Cindy, you had something?
Um,
All right. With that, any other conversation around revenue projections? Seeing none, let's take up some bills. Entertain a motion to go into executive session. So been moved by Senator Murphy, seconded by Senator Rosenwald. Grab the wrong folder. Hey, Sonia. Ava, can you run over to the office and grab my Ways and Means folder off of, I only have the revenues folder. I have all the bills and the amendments. Is that what I meant? We have 3 bills we're going to exec today. I think 2 of them have amendments. Well, we're going to exec 3, but I think only 2 have amendments. One is going to be an ITL recommendation.
I have amendments for all 3.
Okay. We'll take a look at it when we get my folder. Thank you, Ava. All right. Let's take up 328. So what you have before you is, you should have amendment number 1680. We'll just have a general conversation before we go into a motion process. What I did here was, the original bill, I changed the membership of the committee. I think it's important to have Ways and Means members on the committee. So the first two appointments are the chair of Ways and Means and the ranking member of Ways and Means, both in the Senate and the House, because we're the policy committee for gaming. So it makes sense to have people on the gaming committee that knows the existing policies. And then I also added one member at the discretion of the Senate president and one member at the discretion of the speaker. So there's 6 legislative members. And because this is policy-based, I also gave the governor one appointment to the commission, so we'd have an odd number. 3 from the Senate, 3 from the House, plus 1 governor's public appointment, so that we have somebody, if the governor wants to do somebody from the charities, they can, someone from the gaming operators, they can. It'll be up to the governor's decision, but needed an odd number, and I felt this is policy that they're going to have, and maybe somebody from lottery. But it gives them a vote on the committee to keep us at an odd number. The other component I changed was, if you remember in the original bill on page 2, it's on page 2, section 5. They had language that says implementation of charitable gaming laws, which made it seem like the commission was going to run lottery. And what I changed that to was, I find it, commission shall review charitable gaming laws. So it just means they're going to review the existing laws and then see how they, have conversation about how they're working and then whether or not legislative change is needed. And the last thing I changed was down in section 7. I just changed the reporting dates to coincide with bill filing. So if the commission has a recommendation, when they file a report on November 1st, there's a bill filing period that happens after November 1st for legislators to allow us to file reports. And the same with the September 1st date. We have bill filings in September. So anything coming out of those commissions, we have time to be able to put a bill in without having to go to late filing and rules and have to go through that. Any questions on that? So I'm going to move on to pass on House Bill 328. You have a second? It's been moved by Senator Lang, second by Senator Benton to OTP. I'm going to introduce Amendment 1680S. And is there any further discussion on Amendment 1680S? Seeing on all those, Senator Roosevelt.
Well, I just wonder if, and I know this is based on current law, if we're likely to have slot machines, whether we should reference, in addition to HHR, or other authorized, I don't know what you call them, games on chance.
So again, in section 5, we're talking about, which is basically the charge to the commission, right? And we talk about, one of the first things they'll do is take up the former commission report that had some unanswered and open questions, right? The second thing, and any recent effects, so the final report of the commission study on the effects of charitable gaming laws, including HHR, and shall make from time to time such recommendation for the administration and changes to charitable gaming laws and rules as it deems necessary and appropriate, right? So it's not just looking at HHR, it's looking at that last charge, right? Shall make time to time recommendations for administrative and legislative changes to gaming laws and rules, right? So all gaming is open. We can talk about horse racing, we can talk about sports betting, we can talk about, it's up to the commission. In the charge, again, if you look at the last sentence on line, starting on line 11 of page 2, the commission may, upon a majority vote of the commission, take up any such topics it deems relevant, right? So it allows it to adapt to what's going on in the industry and take up a topic as long as a majority of the committee agrees it's a topic we should discuss. They can be self-initiative and start their own topics for conversation once they run out of the initial charges we gave them. We gave them a couple initial charges that talked about things like any possible change needed to address problem gaming, any possible changes needed to restructure or modify systems for allocating and overseeing the use of funds granted to the state and to the charities. And then, A, B, and C there were our initial charges. Take up the last year's commission report plus these three charges. That's your starting point. And going forward, they can add to whatever they want just by a majority vote of the commission. So I tried to make them a little self-governance.
I point out that line 12 is ungrammatical. That before the word however, it should be a semicolon. And after the word however, there should be a comma.
So
This is
if you-
run-on sentence. and
I didn't write it.
Just not punctuated properly.
So if we'd like to, if we adopt the amendment, you want to make the grammatical corrections, we can do that
I
as a
think
committee.
we should.
Then we can address that after we adopt the amendment. So, any further discussion on the amendment besides grammar? All those in favor say aye.
Aye.
All those opposed say nay. Senator Rosenwald offers as an amendment that we put a semicolon after the word relevant and put a comma after the word however. Is there any further discussion on Senator
I hope it's
Rosenwald's amendment?
seconded.
Second.
Oh, thank you,
Yeah.
Senator Murphy.
It's moved by Senator Rowland, second by Senator Murphy for the grammatical errors. Sonia, you got those down? Everyone's clear on what they're voting on? All those in favor of the further amendment signify by saying aye.
Aye.
All those opposed, nay. The ayes have it. Now we're voting on the amendment as, the bill as amended. All those in favor of auto pass as amended, say aye.
Aye.
All those opposed, say nay. The ayes have it. I entertain a motion for consent.
So moved.
It's been moved and seconded for consent, moved by Senator Sullivan, seconded by Senator Fenton, to put this on the consent calendar. Any further discussion? All those in favor of consent, say aye.
Aye.
All those opposed, say nay, and I'll take it out. Next bill we have is 696. So this is a companion bill. This is a parallel bill, and I forgot the Senate bill number. I apologize, but it's a parallel bill. Representative Bose is the prime sponsor. I spoke to Representative Bose. He thinks the Senate language is a better bill. And so you have an amendment in front of you, 1681, which will basically do a wipe and replace of the House bill to put it to the Senate language, which is the Senate position, which we've all already voted on once already and passed both on the here and on the floor. So I'll move on to pass on Senate Bill 696. Do I have a second?
Yeah.
It's been moved by Senator Lang, second by Senator Rosenwald for OTP on Senate, House Bill 696. I'm going to introduce amendment number 1681S, which again, do I have a second for that? Second by Senator Murphy. Again, this is a wipe and replace amendment, put Senate language on top of replacing the House bill, which again, Representative Bose already agrees with. All those in favor of adopting the amendment signify by saying aye.
Aye.
All those opposed, nay. The ayes have it. The amendment is adopted. We're on OTP, a motion for the bill. Any further discussion? All those in favor of OTP A signify by saying aye.
Aye.
All those opposed, nay. Ayes have it. Move consent, seconded by Senator Murphy. All those in favor of consent, say aye.
Aye.
All those opposed, nay. And Senator Murphy, can you take it out?
Sure. Not really a heavy lift on consent.
I know. I always try to take as many of those as I can. Last up is House Bill 247L. If you remember right, we ended up passing last week House Bill 737, which was a local option for games of chance, which we further amended doing a local option for all gaming, including Keno. I just, but so Roosevelt has an amendment. Well, so when you get and talk to your amendment, Roosevelt.
Well, my amendment, I think. I think it
I think you added slot machines to it.
VLTs. And the reason I like this bill in general is that it's opt-in. And we know that if you have an opt-out option, 1 to 3% people will take action. So we also know the governor doesn't want to see proliferation of gambling or an expansion. So I think that by passing this bill with my amendment, we would give the community more control over what happens there versus the one we've already passed, which is opt-out, where people don't bother to turn the page of their ballot, or they don't read the materials, or whatever. I think we will see a proliferation of gambling, which some communities don't want, and I believe the governor also doesn't want. So
Senator
I
Murphy.
know you're gonna move ITL.
Senator Rosenwald, I have a question.
Yeah.
If a community votes to not allow, let's say they move to allow machines, and then several years later rescind that approval, what happens to places that are already operating?
So that's the issue. Those places would have to move.
Microphone.
Those places likely would have to move.
And I think you know my position on
I do.
sort of the monopoly aspect of it. Does it treat places that are already operating as of today the same as places that would open up next week, next year, next month, in next decade? Are they all treated the same?
Well,
Or are they granted special treatment?
the ones that are already existing,
Yes.
I think we've already granted them special treatment in state law.
I would agree with you.
And I'm not sure this really changes it that much because we have granted 14 companies very special treatment. I think it's
Mr.
14.
Chairman. I mean, I'm torn because on one hand, I support local options. I like the idea of, believe it or not, I think there is a role for local control in the state. And I support the right of people to shape the community they're in. And at the same time, I think a little proliferation would be better for the marketplace because it would break up that little monopoly we've granted those 14 special companies. So I actually can see myself supporting your amendment. I just need to sort of think about it for a few
Well,
minutes.
what if I may, we were to knock out Roman 4 at the top of page 2, which is, we changed our minds. And you've got to get out of here.
It isn't Roman 4 that bothers me at all,
Oh,
as long as it would still apply to people, to the current operators.
well, I mean, that's where the town can say, oh, we're going to rescind. We're going to rescind the allowance of operating charitable gaming in a
And
community.
I would anticipate the objection, well, these places have already dumped $1 million into their property. But let me tell you, as a liquor licensee, this is exactly what we have hanging over our heads every day. Our liquor license can get revoked at any time for any reason whatsoever. We've got to go to court to defend it. I mean, it's a real risk. And at any time, the town or city or the police chief thereof can simply write a letter saying, please don't renew this license, and they don't get renewed. And restaurant operators drop millions of dollars into their buildings too. So I don't see why they would be treated any differently.
So the rescinding option
That doesn't
doesn't
bother me.
bother you.
Mr. Chairman, what are your,
So,
I'm inclined to support the amendment.
so again, my problem is number one, not the there's no grandfathering of existing licensees in this bill, so that's problematic for me.
Yes.
Is that, if a business is open, they've been doing business. The second one, this doesn't stop gambling from occurring, this only stops slots and horse racing from occurring. I can still get a charitable gaming license and run a poker room in that facility if I wanted to, which then kind of, if the municipality said, we don't want gaming, but based on this option, they could stop slots or HHR, but not stop poker rooms. Under the previous bill we did, if they vote to prohibit, you prohibit the base license, which is a games of chance license, which would stop gaming from coming into your community as a wholesale, if that's the town's will. I think this bill the amendment just has the problem in that it doesn't deal with grandfathering. In the previous bill, we did grandfather. We said that if you prohibit, the people that are there get to stay. You can't throw them out. I can just too. I mean, I feel your issue with your license, liquor license as well. That argument, but again, if a town chose to all of a sudden say we don't want, put a zoning ordinance that change the zoning ordinance. When you change zoning ordinance, people are still grandfathered in under certain circumstances. When you change from a residential to a commercial district, you don't have to tear your house down if you live in what's now defined as a commercial district. But if we did this, they would have to tear their house down. And I'm not comfortable with that. And again, I think that it doesn't get to the base. You still allow gaming, which is, I think people are trying to prohibit. So I prefer the option we selected, which deals with the base license. And says that if a town doesn't want gaming in its community, it can just prohibit it. And then all gaming is prohibited from it regardless of for retail. Not just certain parts of gaming. Because I think this sets a bad precedent. So what's going to happen if someone says, well, I won't go there. Senator as well.
Thank you. I just feel like all the action in the future is going to be around slot machines and maybe HHR if it still exists. So even though this only deals with those two, I think a town prohibiting those two would be less likely to see the opening of any kind of room at all. And I just think we talk a lot about local control, and this one, for me, does a better job, even though it's only on the two most profitable parts of charitable gambling.
So again, I stated my preference. I prefer letting, you were saying only 1 or 2% of towns may choose to prohibit if it's an opt-out. And so what we're doing instead is we're making 100% of the state forced to opt out, and they have to opt in otherwise. And just because 1 or 2% want prohibition. And I think it's an inverse proportion. We're letting by doing it this way, those 1 or 2% that want to do it can go do it if we leave 737 the way it is. And they can opt out of those at allowing gaming. So we're not going to prohibit gaming if they choose to. And again, if it's only 1 or 2%, why are you making the entire state illegal for the 1 or 2%?
Oh, if I may,
Go ahead.
and I think that's a good point. I've been sitting here struggling with it because the question is what's going to increase competition in the marketplace, and I'm torn between not wanting to protect those 14 current operators and subject them to normal market forces, like every other industry that we in this state, and which going to do that. And I do agree with you on the opt-in versus opt-out. So with consideration, I like a lot of your amendment, and I hope we can work together and maybe find a way to open up the marketplace a bit, but I probably wouldn't support it.
With that, I'm going to move ITL. Because we don't take the amendment up if we have an ITL motion and a passage. So do I have a second for ITL? Second by Senator Murphy. Further discussion on ITL motion? All those in favor of ITL signify by saying aye.
Aye.
All those opposed, nay.
No.
3-2. Do you want this on, you want regular calendar?
Yeah. with-
So we'll leave it on the regular calendar. I'll take it out. With that, is there any other business to come before the Senate Ways and Means Committee? Seeing none, business of the day being done, we are adjourned. Don't forget your homework assignment to take a look at your worksheet to fill in your numbers. So when we come back next week, we can jump right in and it'll be a quick meeting.